Market only trends 20 to 30% of the time. The rest of the time, the market moves in a sideways. Those who succeed in trading always trade with the trend. Now, if you are not finding success as a trader, then this is the most important advice that one must have. And because of that, in this video today, I'm going to show you the secret of trading with the trend. How can you find the direction of the trend as the market consolidate most of the time, and there is a high probability of getting confused when to find the proper trading opportunity in the direction of the trend. So in this video, I'm going to show you step by step how to trade with the trend and how to find the direction of the trend. If you are curious about trading and also want to be successful as a trader by trading with the trend, then I would highly encourage you to watch this video till the end to know exactly how to find the direction of the trend. Now, before I begin this very important lesson, traders, make sure that you give a thumbs up and also subscribe to the channel if you haven't done yet. So without further delay, let's get started. Okay, traders, so you might see some sketch here, very unusual, maybe very little piece of sketch, but this is a very vital information that you will see that over and over in the market. Let me explain what it is, what's secret behind this sketch, and then I will show you in the real chart how to find this kind of breakout when the market just start its trend so that you can get in early enough. So you'll see that, as I mentioned earlier, the market trends only 20 to 30% of the time. And if you really want to get in a trade when the market started its trend or trending, you need to be able to identify when the market is breaking out from this kind of consolidation, because when the market consolidates, sometimes you will see just one candle or two candles or three candle consolidation. That just whenever you trade those kind of consolidation, in most of the time, this will be a losing trade. So then how can you find those kind of trending breakout? So to identify, first of all, a breakout, let's look at the real chart to see how you can understand this kind of consolidation and then breakout, as there is always some kind of clue or information that you can look at to find out in fact it is a breakout or it is still in a consolidation. Let's look at what happened when the market in a range, why it is not profitable to trade a smaller range. Now, when you see that the market in a smaller range like this one here, you might see the market is trending only with a one or two candles. Now, when we trade this kind of structure, a narrow consolidation, in those kind of narrow consolidation, it's where the big boys accumulate the liquidity, as whenever we will be trading in this kind of narrow range, it is going to be most of the time a losing trade. To avoid this kind of trap, what we need to understand is that the breakout candles. So there is a big difference between a breakout candles as well as when the market in a consolidation. So now let's look at some of the real chart example to understand how you can find this kind of consolidation and then wait for the breakout to start its trend. Okay guys, so what you have just seen is just a representation of this chart structure that you can see in this box here. Now, to understand when the market in a consolidation, you first need to see the health of the candlestick pattern. Now, if you closely look at it, you can see that there is a strong breakout here. Now, how do you identify a strong breakout? When the market trends mostly above 10 exponential moving averages. So if you don't know how to find the moving average, you can just click indicator on trading view and then or on your MT4 and then choose moving averages exponential and then pick number 10. Then you will find that moving averages when the market trend above 10 and 20 EMA, that's where we can consider it as potentially stronger trend. Now after a trend, the market is in most of the time you will see in a consolidation or form any kind of structure. Now what do we see in this area on euro dollar? If we look at on the 15-minute chart, we can see the market in a sideways or in a consolidation. Now this is where trading is losing, as I mentioned that most of the time the market in a range, and this is a 1 or 2 candle range where the big boys gathering liquidity for further movement in the market. Now as you can see here, this is a very narrow candle, quite a few narrow candlestick pattern formation in that area, and with those narrow candlestick pattern formation, the market is in a sideways. Now see the candlestick pattern and the health of those candle in comparison with the previous breakout or trending candle. That's where we need to pay attention, comparison with the past price action with the when the market in a sideways. So when we see that the ATR value is well below, that means that the candles are smaller, that's where we will be waiting for another breakout. Now here what we need to understand is that when a market trend, for example when you see an impulse and the market moving in a sideways or in a consolidation, in most of the time as a rule of thumb this market should be breaking again in the major direction of the trend. So with that in mind, what we can see here, a consolidation which is very strong consolidation, and with that consolidation we have seen another strong breakout, and that's where we are looking at in the market. Now in those kind of market when we will be trading, that you can see this is a strong bullish breakout. Now if we replay this chart, what we see here is that when the market strongly break out from a consolidation pattern, that's where you can understand that this market is ready for another move. Now until we see the price has completely broken out of the structure, we will be waiting for the market to show its hand. Now this is where the market is trending. Now how do you identify that breakout? Is when you see that the price is almost above 10 EMA with a stronger bullish price action, and also above both 10 and 20 EMA, which in fact showing a very strong trending direction in the market. So to trade with the trend, the first step is to understand when the market in a consolidation, and once the market will break out, we understand that this candle, which is a very strong bullish price action, is where the market breaking out of the structure, and we will be entering into the trade. When the candle close above shows its hand that it is in fact in a breakout, that's where we will be entering into those kind of trade. Now let's see a couple of more examples to understand when the market is breaking out and starting a new trending direction. Okay guys, so we have found the same situation over and over again in the market. As you know that the market repeats the pattern over and over. So the most important part here is to see the pattern and then identify it. Now the same instrument, as you can see here, a very strong impulse to the upside, and with that impulse what we see, the market clearly traded above 10 EMA with this impulse, followed by a long consolidation or sideways movement in this market. Now what we can see here, that the market is in fact sideways, and if you compare the structure formation here, the market above 10 EMA, the candles are healthy, and the market in a sideways with narrow smaller candle formation. And when this market in a sideways, you can easily understand that how much time it has trended, a very short period of time, and how much time it moved in a sideways. If we compare that, we can see that the trending direction is only very tiny fraction of when the market is sideways, and that is why as a trader it is very important for us to know when the market in a trend and breaking out from that sideways market. As I mentioned earlier, as a rule of thumb, we will be waiting for a market to break out from a consolidation in the direction of the trend. As this market is trending to the upside, the market in a sideways, we will be waiting for a strong breakout from that trend. Now you can see this is euro dollar 15-minute chart, and in that market there is a strong breakout. Now this is the breakout candle that we can see on euro dollar, and this breakout candle is a very strong bullish candlestick pattern, and with that bullish candle we can see the market pull back, and again it's trending with a stronger momentum. Part here is for us to understand when it is ready for a breakout. Now how do we understand? There are two key aspects that we will be looking at when the market is breaking out from a consolidation, is to see the candlestick pattern or a strong breakout candle that has a very strong healthy body, and also we need to see significant sideways movement with multiple liquidity gap from the support level. Once we can see that the market has broken out and already the market has grabbed liquidity from the support, candle closed above with a stronger bullish price action, that's where we will be looking for trading opportunity in those markets. Also, I will create a separate lesson for how to place the stop loss. Make sure you also keep eye for that. In the next week we might find a very important lesson on that. Now as you can see, when the market managed to break to the upside with a stronger momentum, that's where we can see the price in fact from that zone has broken to the upside with a stronger momentum. And when we can find this kind of entry, that's where it is easier for us to find proper winning trades. Now let's see more examples so that you understand how to find breakout after a consolidation. Okay, so we will be looking at on XAUSD 1-minute chart, as this system is applied in any time frame as long as you are trading in the right moment. As if you are trading on such as the 1 minute or lower time frame, you need to find a time when the market is volatile, such as on London session or NY session. So if you look at here on XAUSD from the 1 minute, you can see that this is a pretty strong bullish impulse here, and which is a clean uptrending market. The price is trading above 10 EMA with a stronger momentum, followed by an extended sideways market here. Now this sideways market is quite important, as you can see that the market now trading in that area is not profitable at all. What we need is to identify a clean breakout. Now what you can see here, after this consolidation, the market formed that structure, grabbed the liquidity, and clearly has broken from that structure. Now with this breakout, what we see, narrow to doji formation, that is giving the sign that the bulls are ready for another flight to the upside, and that's where we can find potential entry. As I mentioned, stop loss is always below the structure, and we can target as much as we can based on our risk reward appetite. And that is how we can find simply a consolidation and then break out from that consolidation to trade in the major direction of the trend. Traders, I hope that you enjoyed this very important lesson on how to find a strong breakout so that you can identify and also you can trade in the major direction of the trend. If you find value in it, make sure you give a thumbs up and also subscribe to the channel if you haven't done yet. With that said, thank you and I'll see you soon in my next lesson.